mortgage forbearances going to cause a wave of foreclosures that are going to negatively impact the housing market later in 2020 or 2021? I don't think so. And in this video, I'm going to tell you why. Hi, my name is Andrew with the Andrew Smith team at eXp Realty. And the headline in and amongst itself is sensational. I mean, the headline I just saw last week, it says 8.8% of US mortgages, which represent 4.7 million loans, are in forbearance. So the natural conclusion for someone reading that headline is that, oh my gosh, we've got a wave of foreclosures coming. This is going to be like 2008 all over again. And, I'm not claiming to be an expert, but I was in the real estate market in 06, 07, 08, all the way through that. I saw what the market did. And especially nowadays, I don't take headlines at face value. I like to understand what's going on behind those numbers, take a little bit of a deeper look, and then present my opinion, if you like, or what the numbers say, and let you make your own opinion. You determine for yourself what you think is going to happen. So the idea behind it, if 4.7 million loans are in forbearance, and unemployment is what it is, then the natural assumption is that those loans are going to get foreclosed on and we're in a mess. But here's why that's not true. In 2007, 2008, 2009, as we go back, most of the homes that were foreclosed on, there was no other option for that homeowner besides foreclosure. Granted, short sales did come into the picture, but not at first. Foreclosures started. In an effort to abate all of the foreclosures that were happening, the banks started to push and pursue short sales. I did a boatload of them. I had a company with a friend of mine, and we negotiated short sales for other agents, knew them inside and out. But those were the only two options. In order for a homeowner to sell short, it meant that once the sale had been made, the proceeds from that sale were not enough to pay all obligations in the mortgage. So why do I bring that up? Well, what that headline didn't tell you is that of the homes in active forbearance right now, 90% of those homes have at least 10% equity. So think about that. Even when you deduct real estate fees, costs of sale from that sales price, having a minimum of 10% equity, there's more than enough to pay off that loan and put money in your pocket. If you need to go and relocate to a rental property, an apartment, a condo, there's enough in there. The lenders don't want to go through an entire foreclosure crisis again. I'm fairly convinced, additional criteria will come out that help not kick the can down the road, so to speak, but work with the homeowners. Yes, there was a lot of confusion up front, but let's assume a worst case scenario. Your lender's not going to work with you. Why would you let that home get foreclosed on and leave any potential equity on the table when you can sell it and just walk away? Pay off all the obligations and start fresh. 77% of all of those homes in forbearance have a minimum of 20% equity. 59% of all those homes in forbearance have a minimum of 30% equity. That wasn't the case in 2007, 2008, 2009. You could actually refi your home back then up to 125% of its value. I mean, what kind of logic did that make? None. Financially, none. It's not the same. Those loans don't exist. So people have equity, and I don't know anyone that would leave that much on the table. So I guess the other question becomes, well, that's all great, but with unemployment where it is, who's going to buy? I did another video on digging into the unemployment numbers, and yes, there's uncertainty. But what I do know is that there's plenty of people that want to buy. Most major banks and leading economists right now believe that the housing market is actually going to help pull the country out of the current recession as it has done in many of the past ones, not be a contributing factor to it. So why is that? Well, let's look at it right now. I mean, supply and demand impacts home prices. And right now, if you're a buyer, and depending on where in the country you are, you've been out, there's not a lot for sale. As a matter of fact, if you look at it nationally, the number of homes for sale year over year is down about 20%, 19.7% national average. In the two markets where my teams operate specifically, Frisco, Texas, their year over year inventory, new listings is down 14%. Temecula, California, they're down 27%. There's not a whole lot out there. There's not a lot for sale. So buyer demand is still there. A lot of that is being fueled by affordability. Okay? Homes right now are more affordable than they have been since 2013. Okay? Going back to 2013, in the past 7 years, homes today are more affordable. Okay? If you take out that time of the crash when the market was flooded with distressed properties, homes today are more affordable than at any time between 1990 and 2008. And a lot of that has to do with interest rates. Historically, interest rates are at record low levels. And that is bringing a lot of people that had been on the fence and pulling all of that pent up demand forward. Okay, mortgage applications are at an 11-year high. And the number of people right now, purchase demand as that's measured, is up 20% year over year. So when you look at the fact that there's plenty of people that want to buy, even if you've got a homeowner right now that's in trouble and can't work anything out with the bank, they can sell. For right now, they can put a sign in the yard and sell. And 90% of those people can walk away with a nice chunk of change in their pocket to help them get reestablished wherever they're going. Now, could things change? Sure, they could. I mean, if we look at all of this, even when you look at something like price appreciation, the latest surveys come out just last week on price appreciation for the next year varies from a low of prices actually going down 1.5% to a high of prices increasing by 4%. So even all of those industry experts can't agree. There is that uncertainty, but there is one thing they do agree on. They do agree that there is not going to be a foreclosure crisis, and they do agree that the housing market is not going to crash. So if you're one of those people that aren't really sure what to do, chances are, if you're in trouble, you can sell and get out of that property. I don't recommend that you do that unless you absolutely want to and want to use this as an opportunity to move on. But the banks are going to work with the mortgage forbearance. And if you're looking to buy, or you've been standing on the sidelines thinking that, oh, I'm going to wait and 6 to 8 months from now, I'm going to get a great deal, there's no guarantee that's going to happen, at least not from what we're seeing right now. So again, I'm not claiming that says this is absolutely what's going to happen, but I did want to give you just a little bit more information on the numbers behind the numbers, so to speak. And hopefully that helps you so that you and your family can make the best decision for yourselves.